Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I want to talk about Facebook stock, which reported earnings last week. Make sure you stick to the end of the video for my opinion on this stock. So Facebook is currently priced at $253 per share. When it reported earnings, it spiked up. And as you can see, currently it's up 8.17% as of Friday after market close. Past year up 32%. Past 5 years up 161.94%. So very solid growth and a lot of potential upside. And you can see it dip, but it definitely recovered from that dip. Currently, I have $8,601 in Facebook, which makes up 3.09% portfolio. I'm up 51.97% on this position. Market cap is $723 or $1 billion. P ratio is 32, and dividend yield is 0, which means they're reinvesting all profits back into growth. So out of 48 analyst ratings, 83% give it a buy rating. Now for earnings, you can see actual earnings per share was $1.80, which is better than the expected earnings per share of $1.39. So good to see that kind of performance. Now for Facebook, they are a social networking company. So they have not only the Facebook platform, but also Instagram, WhatsApp, and Oculus virtual reality. So a lot of users on Facebook, Instagram, and WhatsApp, and there's growth in the virtual reality platform and a lot of different kinds of applications. So taking a look at the Q2 2020 results, you can see Facebook daily active users, and as of Q2 20, you can see that there's 1.78 billion users, and you can see it's steadily increasing quarter after quarter. So it's great to see that kind of daily active user growth even at this size. Next is the monthly active users, and same story. You can see it's steadily trending quarter after quarter, and as of Q2 2020, it's 2.7 billion users. So relative to the entire world population, that is a lot of users, and it's still tends to growth quarter after quarter. Next is the Facebook average revenue per user, the ARPU, and you can see worldwide it's $7.05, which is better than the previous quarter. Not as strong as the Q4 2019, but during these times, people are spending less on advertisement, which is Facebook's primary revenue stream. So as people spend less on ads, you can see it took a slight dip in Q1 and Q2 of 2020, but I think as times get better, then people will spend more on advertisements. And as you can see, Asia Pacific, it's slightly lower than the worldwide number. US and Canada makes the largest, it's the most revenue generating per user. So you can see $36.49 in Q2 20, slightly better than the previous quarter, but not as good as Q4 2019. Rest of the world, $1.78. So relative to US, Canada, it's a lot lower in international market. And then Europe is pretty good at $11.03, slightly better than Q1 previous quarter, but not as good as the Q4 2019. And usually companies spend more in Q4 2019 because of the holidays, and a lot of sales can be driven by those ads. Next is the family daily active people in billions. You can see steadily growing quarter after quarter, and as of Q2 20, it's 2.47 billion. Next is monthly active people is at 3.14 billion, which is very impressive. Quarter after quarter, still continues to grow. Family average revenue per person, ARPP, you can see it's $6.10. Slightly higher than Q1 20, but not as good as Q4 2019. Revenue in millions. So you can see most recent quarter, $18.6 billion. Same story, slightly better than the previous quarter, but not as good as Q4 2019. But year over year, it's still better, so it's good to see that kind of growth. Now for revenue by Facebook user geography, you can see US and Canada make the bulk of it, then Europe, then Asia Pacific, and then rest of the world. So 18.6 billion, which is great to see. Advertising revenue by Facebook users geography, same story. That's the breakdown. Other revenue by Facebook user geography. Surprisingly, Q2 20 was better than Q4 2019. Now expenses as a percentage of revenue, you can see that Q2 20 is pretty consistent with the previous quarter. So slightly higher expenditure or slightly lower expense relative to last year, Q2 2019. Income, it dipped in the Q2 20 as well as Q4 2019. Operating margin, so we want to see this number to increase, but it's 32% at the moment. Not as good as previous quarter and definitely not as good as the Q4 of last year. So they're definitely taking a hit as they increase their expenses. And advertisement revenue is less. Operating margin is definitely impacted. Effective tax rate, you can see it's at 16%. So it's steadily hovering around the 16%. Net income in millions, you can see it's 5.178 billion. So great to see that net income. Now in terms of the actual details, financials, you can see it's year over year, it's been increasing from 2016 all the way to 2019. But quarterly, you can see it's slightly better than Q1 of 2020, but not as good as Q4 of 2019. Analyst ratings, 1.8 rating, so that's a solid buy rating. Average price targets out of the 46 analysts say $253 per share versus the average of $257 per share, so slightly below the average. For key stats, you can see trailing PE is 31 and forward PE is 26, so slightly better in the future. PEG ratio, so it's price earnings relative to growth, 5-year expected, is 1.89. You typically want to see this number below 1, but with Facebook having a lot of growth potential, it's I think it's expected to pay that premium. 52-week change is performing better than the S&P 500 market overall. Scrolling down a bit, you can see held by institutions, about 79% held by institutions. They don't pay a dividend yield, so it's reinvesting all profits back into growth. Profitability, profit margin is 31.3% and operating margin is 37%. So very profitable company. Management effectiveness, return on assets is 13%, return on equity is 23%. For income statement is $75 billion. Quarterly revenue growth is 10.7%. Gross profit is $57.9 billion. EBITDA, so that's earnings before interest, tax, depreciation, and amortization, is $34 billion. Net income is $23 billion, and quarterly earnings growth is 97.9%. So great to see that kind of growth. Balance sheet, total cash is $58 billion. You want this to be a higher cash position so that during tougher times in the macroeconomic level, it would continue to maintain and sustain itself. Total debt is $10.5 billion. Debt to equity is 9.54. So for every dollar equity they have $9 in debt. Book value per share is 38.75. Operating cash flow is $33.2 billion, and levered free cash flow is $12.3 billion. So Facebook is a highly profitable, high growth company with a lot of potential upside, especially with so many users on their platform. As they continue to monetize other platforms, I think they'll increase the revenue per user number, and they'll continue to grow the user base across all platforms from Facebook, Instagram, WhatsApp, and Oculus Rift, with VR becoming more popular with more user applications. I think VR will also take off. So Facebook is positioned very well. I think it's has more growth potential than Google, and I will continue holding my position. I may increase this position when there is an opportunity to buy. But yeah, Facebook is a solid buy from my perspective. And even though they don't pay dividend yield, they are definitely reinvesting all profits back into areas of growth that are having a solid return on investments. That's all for this video. What are your thoughts on Facebook stock? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.